Hello, this is Dave, and welcome to Equity Story. And we know it's a tricky time on the markets at the moment, but just wait, be patient. I think this market, there's some stories that are interesting now. There are some dividend stories, and I'm going to talk about those in a second. Absolutely, I think some interesting stories there. But the market's going lower, and there'll be opportunities. And the question is, when will that opportunity be? Now, it might not be quite as long as you think, and I'm going to talk about that in a second. But this is just general share advice and not personal advice, as per the disclaimer that you can read here on the website. So, just having a quick look, what we had overnight, Nasdaq down, record 2 yearly lows. So you can see this market is getting lower and lower and lower. And again, you can see the Dow sort of down slightly and near those record lows as well. The question is, I think on Thursday we've got more CPI numbers coming out in America. It's going to be a pivotal moment. I expect those CPI numbers to read pretty poorly, and I do expect this market to keep going down. I suppose the catalyst, what will keep this market or give a shock to the market to see those bigger falls, could be something to do possibly in Europe with those derivatives. There seems to be a lot of stuff coming out of you've seen Credit Suisse having issues, uh, pension funds in the UK going broke. This is 2008 all over again. But this time it could potentially, I was talking to Mark, one of our analysts, it could potentially be a lot worse. But 2008 it was just the subprime crisis. But now it seems to be every which way you lose, every which way you look, there's like issues coming out of the woodwork in a lot of these sort of institutions, and all this cheap money we've had for years and years and years. Unfortunately, guys, it's payback time at the moment. But is it going to be as bad, and is there an opportunity? And that's what I'm sort of going to talk about. And I can see this market potentially going a lot lower, and maybe 26, 24, somewhere down here, and fairly quickly. So in the next maybe month, November, halfway through November, bang, I think we're going to go a lot lower. Um, and someone said to me the other day, what's the catalyst? What's the catalyst to maybe this market having a bounce? Well, you know what, we don't really know, but the charts will tell us, and we'll look at certain things. But one catalyst could be, and it sounds a little bit sort of awful to say this, but one catalyst could be an expansion of the war in Europe, and maybe even a few nukes going off. Because what's going to be the reaction? I think it'll go again back to the same reaction you have in most times of war and what we had in the Second World War. You could potentially see a lot of money flee Europe. And where could that money go? Well, I think it will go into those big stories in the Dow. It could come over here to our market, even here in Australia. And potentially, certain markets could be well supported. Um, and, I suppose the question is there going to be, could there or potentially be a nuclear war? And, um, I think we've got such idiots around at the moment. Now, I don't care which side you're on in this war. I mean, most of us are obviously supporting Ukraine because they're the country that got invaded. But equally, Ukraine has got a leader who's certainly a little bit of a basket case as well. So um, I'm just going to show you this video that he did recently, so just get you an idea. The sort of talk that's around at the moment between the Russians and the Ukrainians.
Що повинно робити НАТО? Унеможливлювати застосування Росією ядерної зброї. Але, що важливо, я ще раз звертаюсь до міжнародної спільноти. Як це було до 24-го? Превентивні удари, щоб вони знали, що з ними буде, якщо вони застосують, а не навпаки. Чекати ядерних ударів Росію, щоб потім сказати, ах ти так, ну ось тримай від нас. Переглянути застосування свого тиску. Ось я вважаю, що повинна робити НАТО. переглянути порядок застосувань.
Really, absolutely unbelievable when you hear that. So what Zelensky's talking about, he's asking basically for the uh, NATO to start doing preemptive strikes against Russia. I mean, the world's gone mad. You've got Putin again, got a new general now in charge, a general um, who was responsible for a lot of gassing people in Syria, a general responsible for um, some pretty awful crimes against humanity. Now, never have you seen, and you got Biden to boot, who's the most incompetent world leader. I mean, are we going to have a bigger blow up of war in Europe? And the cards are that we're going to have. And I'm watching that pretty carefully because I think when we get that big blow up and we get that shock and maybe the market goes down a little bit further, that could be our signal to start buying this market. And that's the signal where um, I think you're going to see a lot of money go into, you know, where's your money safe in this world? I mean, possibly you've got property, you've got gold, and you've got shares, good companies, good growing, good dividends, um, and that's I think where the world is going to be looking at to invest in over next year, but try and time it at the right time. But yeah, listen, pretty worrying times, but we just got to trade around these worrying times, and if we do it correctly, if we do it properly, opportunity knocks, and no one likes to say opportunity knocks in times of war, but at the end of the day, we're here to try and direct you and get you in the market, out of the market, which we've always done. I think everyone will never deny the way we picked the market the last 4 or 5 years in equity story has been pretty incredible. Um, but our job is to try and get you in when the time is right. So that's when we make our money, really. And we'll see if we can do that for you, and hopefully we will. And there'll be some time, I think, over the next 2 or 3 months. Um, Saying that, there are stories that, you know, what's wrong with a good dividend stock, which isn't going to go away, or it's got stable dividends. Um, Yesterday we talked about DBI, and again they had a strong announcement today that they're lifting their dividends, and they managed to. I'll bring it over here if you have a look at it. I don't know. I was reading it, but anyway, they've managed to renegotiate most of their terms on their infrastructure business with most of their clients. They're paying quarterly now, quarterly dividends, paying um, I think it's around 20 cents per dividend. So getting up there to um, 8, 9% roughly. Good little dividend play, and they're looking to keep rising their dividends. So again, those of you looking for a dividend, maybe worth having a look. I'm just looking at it now. It's at 226, come down a little bit of profit taking. Um, Had a few emails come in saying, Dave, I know you talked about this story as a dividend play yesterday and the day before, and guess what? I bought it. Well, great. Well done, guys. That's what we're here for. And but again, I think, if you're in it, I'd be holding. I think it looks like a solid little dividend play. Um, as would Hello World, again, came up with some strong numbers today. And, for me, let's have a look at the dividend of Hello World at the moment. And they are paying just under 5%. But again, good numbers. They came out today, and their quarterly trading update was. I can bring this across so we can all have a look at it. The quarterly trading update was. Here we go. There you go. EBITDA for the quarter was 5.3 compared with EBITDA loss of 3.3. It's pleased to report that all 3 months of the quarter delivered positive EBITDA. But what you're seeing is that the world is starting to open up a little bit, and they're getting a lot more traction as well over in New Zealand, and happy days. But one would think paying a decent little dividend, and again that would be well supported. So if you're looking for that sort of 5%, hello world, well worth having a look at. If you look at the share price movement, it holds up reasonably well. I mean, I can put some of these dividend plays on a monthly, and sorry, it looked better on a weekly, didn't it? But anyway, it's been going sort of for the last 2 years sideways, and generally speaking, holding up around that sort of $2. Um, a few months ago, we looked at a number of dividend plays or stocks to just, what we said at the beginning of this year, literally, it's going to be really tough, and dividends are going to be sort of a big part of maybe just getting through this really difficult next 2 years. And I just want to have a look at these dividend stocks because there's one that's just recently paid a dividend, and I think it's an opportunity knocks if you want to have a look at it. So I'll go through them all. And these were the large caps, some of the ones that we're talking about, the JB Hi-Fi's. Again, I think it's held up really well. BHP, again, generally speaking, as a dividend play, is held up very well. COF, a little bit sold down. There is a little bit of support here. Now, I'm still holding this for me if it's a dividend play. It's got a lot of um, government contracts. I've got good properties. I think this sell down is a little bit overdone. Um, you've got to maybe have. We all always agree you've got to have a stop loss on everything, and maybe for me, if you were still in it now, you'd be holding it. Maybe your stop loss would be somewhere around 135. But at the end of the day, it could be an opportunity. Again, a very, very strong dividend, and I think well worth having a look at. Suncorp, again, this is another one that's held up really, really well, really through the whole of this year. I've got a monthly chart at the moment, and strong little dividend player. Metcash, um, likewise, again, this is a company that gives pretty sort of staple. It's a staple, very sort of strong revenue, strong earnings, and just come down a little bit. Most probably around that sort of 5.5%, 6%. Well worth having a look at. We had two banks in there, ANZ that's held up really well. CQR, another property story, has actually held up much, much better. I think that again, you look at the price action, it doesn't look too bad. Coles has come back down to trend, so maybe if you're looking at more dividend plays, I think Coles around this 16.49 could be well worth having a look. That's just under 4%. Um, so as a possibility then, if it maybe went a bit lower, 15, you could get a little bit more. NAB holding up reasonably well, so is VCX. So they basically held up really well without sort of putting the lights out. But anyway, we're just looking at dividend plays. But certainly the small cap dividend plays have done very, very well. And COV has been superb. PTB got that takeover offer, was again very strong. PTL, Pental's been superb. CAA, down a little bit recently. Capral, but again, these are all dividends they're all paying about 8% dividend. IGL also has done very, very well in a really tough climate. SXC, which I'll talk about in a second. NTD, which we did talk about, just got very strongly sold off. And I think maybe near an exhaustion pattern here, but we did suggest getting out of there at 92. I think if you're still in this, that's fine. I'd hold it. Maybe your stop loss would have to be at the end of that exhaustion pattern, so if it went below 60. SFC, again, has held up extremely well and given us an excellent dividend. And HPI, been a little bit weaker, but generally speaking, holding up and not looking too bad. So, but of those stories, SXE could be another dividend, again, small cap. But, if you look at this on the weekly chart, it's just come back down to trend after paying that dividend. And I think, if you're not in this story, it's worth having a look at it because it's giving you a nice little dividend of 7.81%. It's trading on a P of 10. A company that's had winning contracts after winning contracts and been doing very, very well this year. So I'm going to put that one up with those three. So let's do that. Let's put SXC as a dividend idea. And what I might actually do is, I think when you look at insert row, I think you could also put Coles in there and Metcash, which are both slightly sold off. Maybe Metcash is even better because Metcash you're getting an even bigger dividend. So just going to recap those for you. DBI, I think it's still, I'd be getting into this for a dividend. It was up at 240 today. It's come back a little bit. Maybe there's the opportunity. HLO, Hello World, 5%. Coles, just 4. SXE, 7.8%. Metcash, about 5.5%. I think there's some pretty good dividend stories there. And, if you need that sort of return, I think well worth maybe having a look at. Um, the other thing that's interesting really is our favorite little gold. So, you look at the gold price in Aussie dollar terms. Again, you see the Aussie dollar weaker overnight, and you're seeing this American dollar get stronger. And again, as we maybe get more nearer this time, or maybe war, or we get talk of war, we're going to see the Aussie dollar get stronger and stronger and stronger, which possibly we're going to see these Aussie gold producers making more and more money from gold. I know, sort of, and if you look at gold, I mean, Aussie dollar terms, it's trending absolutely beautifully. So it's only $200 off all-time highs, which was back in September, July last year. Um, and when you look at that, you look at things like Newcrest, which around a similar time were trading as high as $35 and now it's 17. I mean, Newcrest is down by half, but the difference in value, or the difference what they're getting in gold, is possibly down 5%. I don't know. Maybe I'm missing something here, but some of these gold plays look like this amazing value, and I know they're below trend, but you can see why we put this one on as a trending stock. We put a stop loss on it, but I think if you're patient with Newcrest, I think you could do really, really quite well. Especially that as soon as I think we start seeing more issues around the world war-wise, gold should again be well supported. And again, DEG had a very strong capital raise around that $1. So if I was in that, I'd be holding it. And then MEK as well, our little more specky gold play. I think still holding up reasonably well. So 3 gold plays there to NCM, DEG, and MEK. I think well worth having a look at. Just news came out. FME future. This is Platinum Explorer. It's got some, starting to do some more drilling. We're watching it pretty carefully, the story. I'm not saying buying this by any means. CTT. It's interesting. I was talking to a real estate agent the other day, and he's saying, the top end of the market, the 10 million to 20 to 30 million, he works in that sort of bracket, and I was trying to sort of get a feeling off him how the market was. But he's in, that top end. Those guys have got like millions. They what do they care? 5% or 4%. I think that end of the market holds up really well. And interestingly, CTD, Satir, which has deals in really expensive clothing, $700, $800. They had some pretty good announcements there. Their numbers are up and looks fairly good. Would we buy it? No way. It's in the wrong business. It's in the wrong sector. But it's just interesting, isn't it, seeing that top end holding up reasonably well in these difficult times. And then BMT again had a strong announcement. Healthcare company. Are we going to buy it? No. I mean, it's on our watch list. We really do like the story. But I just, look at it technically, it still looks very, very weak, doesn't it? Below trend. It's just a sign of the times. So there's so many interesting stories out there, but unfortunately, things like BMT, they're just going to go lower over the next month and a half, and I think we're going to be able to buy these at a better price. Just to recap, a few dividend stock ideas there: DBI, HLO, Coles, SXE, Metcash, MTS, Gold Place, Newcrest, NCM, DEG, MEK, and watch out, because unfortunately I think things are going to get a lot worse in Europe than what you've seen, and you can see by the rhetoric of some of the leaders there. The world's gone mad. That's all I've got to say. So don't wish to panic you too much, but we're on the ball here at Equity Story. We're watching it. We're watching these world events, and hopefully we'll make the right decisions at the right time for you to try and, how do you say, manipulate your way around this difficult time we're actually working in at the moment. On that note, thanks very much for listening to Equity Story, and have a wonderful day. Bye bye.